Welcome to the Mortgage Rate Weekly Market Update for the week of September 11th, 2017. Hello, I'm John Thomas with Prime Residential Mortgage, here to give you an update. Well, mortgage rates have been moving lower for the last couple of weeks. If you take a look at the bond chart on the screen, you can see that long upward channel there with that arrow. Mortgage bonds have been moving higher since the beginning of July, which has moved interest rates lower. So mortgage bonds hit a tough ceiling of resistance on Thursday, as you can see right there with the green candle, but were turned lower on Friday. So low inflation, meager wage growth, inept Congress, and underperforming GDP remain primary tailwinds for mortgage bonds and lower rates. But with mortgage bonds being turned lower on Friday and rates being at record lows since last November, we're going to recommend locking in your mortgage interest rate. Take advantage of these all-time record lows again. And just go ahead and lock it in. Now, in economic news, there was a big data breach at Equifax. They discovered on July 29th they'd been hacked. The hackers obtained basically consumers' names, social security numbers, date of birth, address, in some cases even their driving license information. It was 143 million people affected. Now, Equifax has set up a special website so that you're able to check and see if you were affected. It's www.equifaxsecurity2017.com. Once you click on the website, at the top, check potential impact. If you click on that, you put in some information. It'll tell you if you were impacted, and if you were, you can enroll in Trusted ID Premier for free. You just got to fill it out. So that was a huge thing. Definitely recommend you checking, and if you were affected, getting some kind of ID protection program, because the hackers have your information. They're going to be selling it. And then we saw President Trump and congressional leaders agreed to increase the federal debt limit, which means they can keep borrowing more money and increasing the federal debt, which is above $18 trillion now. As well, extend federal funding until December 15th, gives them time to pass a budget without a government shutdown. And in that bill, they also provided aid to the states affected by Hurricane Harvey. So that was a good bill that passed there to keep the government going and provide some aid. Then we saw the previous week the jobs report for August 2017. It came out and it was a stinker. 156,000 jobs were created, well below expectations of 183,000 jobs, and the unemployment rate ticked up from 4.3 to 4.4%. The other big thing in that report is there's no wage growth, very anemic, only 0.1% wage growth. You need wage growth to get the economy growing so people have money to spend. Then we saw the second reading of gross domestic product, or GDP, for the second quarter of 2017 came in at 3%, which is up from the first reading of 2.6% of the second quarter. So that's the best reading of GDP since the first quarter of 2015, and this was also the president's target GDP when he took office. So we'll have to see if that can continue. Now, weekly initial jobless claims jumped 62,000 claims to 298,000 claims for the week, and the previous week's claims were revised higher from 232 to 241. This was much worse than expectations, but we must take the report with a grain of salt, because 52,000 claims were from people affected by Hurricane Harvey. So we'll have to see how this pans out over the next couple of weeks. And then in housing news, CoreLogic released their home price index for July 2017. It was up 6.7% from a year ago, and home prices were up 0.9% from June. So CoreLogic stated that the continuation of a shortage of inventory of homes for sale will keep an upward price pressure on homes throughout the end of the year into next year. So we're going to see home prices continue to climb. That's great if you own a home. If you haven't bought a home yet, get out there and buy. Each month you wait, it's going to cost you that much more. Now, in the local news, the next first-time homebuyer seminar is this Saturday, September 16th from 10 a.m. to noon in Dover, Delaware at the Dover Holiday Inn. And the next one in Newark is Saturday, September 23rd from 10 a.m. to noon at the Christiana Hilton Hotel. You can register for either one of those events. Give us a call at 302-703-0727 or online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.